How do you approach valuation of industries that are rapidly changing? That's something that I'm going to cover in this channel. So guys, as you smash that like button, let me run that intro. What's up guys, and welcome back to the channel. Now this is once again the Q&A series on this channel, and I got a really interesting question, and this one actually came from one of the Patreons, and the question is, how do you approach valuation in industries that are rapidly changing or uncertain? And I think that's a really good question, and I would say that you really just have two options in this scenario. And I'll start by just linking this stock analyzer tool, which you can download for free in the description below. And really what it is it guides you through the 4 questions that you should be answering or asking and answering as you invest in companies. And so really what this question has to do with is question number 2: does the company have favorable long-term economics? Well, how can you value a company if you don't know what they're going to look like in 20 or 30 years, because it's rapidly changing? And so I wrote the question here: how do you value a company if you don't know if it'll be competitive over the medium to long term due to the rapidly changing industry or economics of the industry? And so that's a really important question that you have to ask. And I ask it right here: will the company be competitive over the very long term? Because that's really what we're going after. If the industry is changing, you just want to know that, or you just want to get a good understanding of if your company will be one of the ones that are changing the industry and remaining competitive. Now, some industries are easier to gauge that than others, but I would say that change is sometimes difficult to value in for value investors. And so in this situation, I would say you have 2 options. You can either move to a different opportunity, which is what I tend to do more often than not, or you can value the company in an extremely conservative manner. But I would only recommend this one. I mean, none of this is ever investment advice, but I would only recommend the second option if you kind of already know the industry. Like it's something that you have somewhat of a circle of competence of, but it's like on the edge of your circle of competence. And so maybe there you want to be a little bit conservative. But for the most part, I'm saying like 99% of situations, I'd probably just move on to a different opportunity. So that's largely how I handle it. And the way that I kind of think about the circle of competence is that by passing on the opportunity, you're really just saying that it's outside of your circle of competence, and you're not saying that you're dumb or not capable of understanding the business. Really what you're saying is you're trying to be prudent and careful and make business decisions, and this is just not the area that you want to be allocating capital, because you have less visibility, and there's nothing wrong or inherently bad about that. And so here's a point that came from the 1996 Berkshire Hathaway shareholders letter. So here's what Buffett said: what an investor needs is the ability to correctly evaluate selected businesses. Note that word, selected. You don't have to be an expert on every company or even many. You only have to be able to evaluate companies within your circle of competence. The size of that circle is not very important. Knowing its boundaries, however, is vital. So, even Buffett says it, understand what you understand and just stay within those bounds. And the interesting thing about the circle of competence, and this is why I brought this image here, is that you will always overestimate what you know. And so because of that, if you think that something's on the fringes of your circle of competence, it's probably beyond your circle of competence. So just be very careful, be very prudent. And it's one of the reasons actually why whenever you guys see me building a model out on a company or any type of valuation that I walk you guys through on this channel, you'll notice that I'm always super conservative. People get upset sometimes and they're like, you're too conservative with this opportunity. But the point is that I'm being conservative because I don't really know what I don't really know. And so I'm saving myself from my own ignorance, even in spaces that I'm comfortable valuing. Now, a great example of an industry that you guys have asked me to value a lot is the rapidly changing chip industry. Now, the design part of it, at least. And so the current leaders are NVIDIA, AMD, and Intel. But with more and more companies beginning to design their own chips, who knows who the leader will be in 25 years. And so for that reason, I've largely stayed away from investing any part of my portfolio in this industry. But for you guys know that I have built valuations for all 3 of these names, and also Taiwan Semiconductor, which you can get to with the tracker. But the point that I'm making is, like, none of these companies have entered into my portfolio because I just don't know how to look at this industry over the long term. And here's the tracker that you guys can get access to at that lower tier of the Patreon. And so join us on the Patreon. I think it's the best value on YouTube. But I've grayed out most of it, but I just wanted to show you guys that, you know, just on the top area of the tracker, you can see that there's Intel, there's Taiwan Semi, and then lower down on this list, because it's sorted by share price as a percentage of intrinsic value. So lower on the list, you'll have AMD and NVIDIA as well. And so essentially, I'm valuing them at greater than 100% of their intrinsic value. But the point is that I was super conservative on the valuations for those names for a reason, because the industry is very much outside of my circle of competence. However, I just tried to build a model view for you guys, which you guys can of course use, and then, you know, put in your own estimations for how you see revenue growing, etc., and then come up with your own valuation. But it's largely just to sort of like help you guys. And so once again, if you want access to that tracker, you can get access to that tracker at that lower tier of the Patreon. And if you want to join us every month for a live call, you can actually join us at that higher tier. And just a reminder, guys, this is just one video in a larger Q&A series where I'm trying to answer as many of your questions as possible. And so if you've missed any of the videos in this series, I highly recommend them. And so the link to the series is right here.